Okay. Should be good now. Hopefully. Let me see here. Okay, good. Start streaming. Perfect. There we go. We're alive. We're alive. We're alive. We're alive. It took a little bit, but we are alive. Okay. All right, so a lot to cover here, a lot to go over. Thank you guys for coming. Of course, first off, if you can hear me, hello, hello, hello. If you guys can hear me, let me know if you can hear me loud and clear, and then we are good to go. Daytona, thank you so much. Okay, so let's talk about Bitcoin. Let's talk about Ethereum. Let's talk about education. What I'm going to do for the stream setup, of course, is going to be around 30 minutes, so I need your undivided attention for 30 minutes. I will most likely go over, well, rather, I am going to go over Bitcoin first, then Ethereum, and then we're going to show you guys, rather, I'm going to show you guys exactly how I trade, why I enter trades, how to do it, and some little tips and tricks that you can use along your way for your trading style. Now, number one, looking at Bitcoin, we knew the fact that 64.6 was a major resistance level. You can see that today we actually did see a very nice breakout formation of this level into the highs of 65,820. Now, of course, we did have liquidation Thursday today, and I managed to close my trade for about 100 or 200% profit or something like that. It was right around this zone right here. It was a nice scalp. Obviously, I could have held the trade longer, but I knew the fact that if I held it longer, I could have reversed. And you can see that as of right now, the trade has reversed, and I will talk about that in a second as well, how to spot that. So looking at Bitcoin right now, what we want to see, of course, is 64.6 end up holding as support. What most likely is going to happen, EMAs are over leveraged. We're probably going to wick to the EMAs and then fly back towards the upside for the continuation on Bitcoin into the 68K to 69K. And then, of course, the next hurdle will be the all-time high. That's exactly what I'm paying attention to as of right now on Bitcoin. So once again, just the EMA retest, and then we can start continuing pushing forward. Now with Ethereum, we actually have a little bit more of an interesting setup. On Ethereum, we're right now, of course, you can see we haven't broken above 2711. I'm going to delete all these magical circles. That's probably from the last live stream. But what we need to see is, of course, 2711 break in order for us to see any sort of continuation. Once we see 2711 break, then we have a reason to enter a long position. I would highly suggest you guys not looking for trade setups on Ethereum as of right now. The reason for this is from previous price analysis as well. I mentioned the same thing. I'm like, look, we've seen this consolidation time after time after time before we saw the break to 2711. Right now, we're in that same sort of situation. You can see we are now consolidating and the chop is playing out. It's much easier to just simply look for 2711 break than to try to guess if this market is, of course, going to break upwards or if we're going to break back towards the downside. We don't like the 50-50 game. We really like just breakout trades or trading into the resistance. And I'll explain to you guys how I spot that stuff as well. But just for right now, like I said, for Ethereum, 2711 break, retest as support. That's your long position. We are in that W formation, of course, overall, something like this. And you can see Ethereum, then it would play out into the $3,200 range, which should put Bitcoin around the 67, 69K as well. So everything does line up perfectly in terms of that. Now, last but not least, Doge. I did make a video on Doge, but look how beautiful this trade setup was. This is something that was very, very simple. All we were really doing was just waiting for 0.11. A lot of you guys kept saying, oh, Pingu, it's getting so close. It keeps testing. It's not going to break. I don't know what's going on. You can see the fact that we had quite a few fake outs. I mentioned there's no reason to panic unless we break below 0.106. That would be an invalidation zone. We didn't see that break formation. Instead, we actually closed back above the exponential moving averages with a very strong bullish engulfing candle into the highs of 0.12. Now, of course, we're seeing a little bit of a retrace. Does this mean it's over for Doge? Should we start closing our trades? Yes, you should probably take some profits, but no, it's not over for Doge. Instead, we might actually see a much stronger continuation if, of course, Bitcoin and Ethereum see that squeeze as well. So just something to keep in mind when it comes down to altcoin trades is you want to ideally have the best areas for those trades. And what I mean by that is you want to have the right circumstances. If Bitcoin's pushing but Ethereum's lagging and the altcoins aren't showing much strength, probably not a good time to enter some trades. Now, vice versa, same thing, right? now you see Bitcoin pushing, Ethereum and altcoins, Popcat, all the meme coins, everything's running, then yes, it's not a bad idea to be looking for those setups. But Doge, of course, was an underlying factor. Doge, we already knew the fact that 0.11 was retesting so many times. We had to keep an eye on it. It was very, very simple. We had to keep an eye on it for that continuation. Now, before we start on the educational standpoint, first of all, thank you guys so much for all the likes. Really, the likes that you guys did today for Doge, the 30 likes, that video has like 600 views, and it's like probably the most views I've gone very, very fast. So I appreciate that. I'm just going to read the chat real quick. Most likely people record all live. Yes, this stream is going to be recorded. So again, but I would highly suggest you guys just paying attention while you can. Again, it's not going to be a long stream. It's just going to be 30 minutes. I got stuff to do, and I just want to quickly point out the educational standpoint and what I look for in trades and everything else, and a few things for psychological that I did talk about last time, which I will talk about again because there's more of you, okay? Okay, so let's talk about trade setup. So in terms of charts, I'm going to go very basic here, okay, guys? Super basic. You know what? I'll even make it better. I'll just do a Litecoin setup, like an empty chart. You can see that we have a line here. I'll just get rid of this line. So we're going to do an empty chart, okay? I don't really analyze Litecoin, so it's a good area of opportunity to learn. And we're just going to start with Litecoin. And just, again, you can use any pair. It works for anything. It's just a matter of retesting, or like looking at it over and over and understanding how to do it. So obviously, in terms of chart setups, first things first is indicators. I use RSI and I use exponential moving averages. Which exponential moving averages? The 9 and the 20. Now, how do you go about adding those to your chart? You go to indicators, you're going to type in moving average exponential right there. It's going to pop up. You click on that and it's going to show you this line. Then once you're in this line, you're going to see this. Indicator time frame chart length, you're going to put 9. You're going to leave everything else default. The second one, you're going to do the same thing. You're going to put 20. You're going to leave it default. It's going to be very thin, so you can change the style. I like making my style a little bit thicker because it gives me a better idea of, when I'm looking at it. I have bad eyes, so I don't know about you guys, but my eyes, it's all over the place. So I prefer to look at the chart with bigger lines. Okay. Now that you have your indicator set up, number one rule, you do not enter a trade without proper confirmation. So what that means is, just because RSI is overbought or oversold, that's not a trade confirmation. Just because it looks like it's going to reject, that is not a trade confirmation. So now, how can you draw support and resistance lines like mine that are very accurate? How do I know why is it that my lines are all like every time they hit, it immediately rejects or immediately breaks through? Why is that? So, in order to place your resistance line, what you have to pay attention to, number one, again, this is a blind chart. The first thing I look at is, okay, where is the market hitting resistance the most, or the ceiling rather? So since we're talking beginners, where is the market rejecting? Where do you see the red candles coming the most? And number one, of course, would be right here, right? So I'm going to zoom in for you guys so everyone can see. So right there, right? Here's your first one. Number two, we have another test right there, okay? Then we go sideways. Oh, there's another one right there. So why this level? What's so special about this level, right? And then we're going to continue to now today's price right here and right here. So you can see just by zooming on the chart on the 4-hour time frame, right? We're only on the 4 hours, so I only teach you guys on the 4-hour. So on the 4-hour time frame, you'll notice that there's multiple resistance tests on this level here at around, let's just say $68 on the flat. Let's just say 68 flat. So what I do is, of course, I go ahead and grab my horizontal ray, and I'm just going to put it right there. There's my resistance. Is it accurate? Right? The question becomes, is it accurate? We don't know. We don't know if it's accurate. Why? Because we haven't looked at previous levels. And I'll explain to you guys in a second. But for now, we're just going to go ahead and put our line right there. $68 flat is where our resistance is. Now, I always teach you guys, we trade off wicks. Wicks always tell a story. What is a wick? Well, a wick simply is this magical line you see here. These little candlesticks, these little lines, that's pretty much what we talk about is a wick. Can you trade off candle bodies? Yes, you can. You can definitely trade off a candlestick body. And what I mean by that is, can you put your resistance line through here, like between the candles? You can, but it's not going to be accurate. And the reason for that and why a lot of traders struggle is because usually their support and resistance are wrong. What they'll do is they'll simply just put it in between the candlesticks and they won't put it towards a wick. So what I mean by that is they'll look at it from a candlestick perspective and they'll draw a line maybe here at $67.62. Why? Because that's where the candles hit the most. So it makes sense to them. Why do we put ours to the wicks? Is because this is a worst case scenario if it hits. And I'll explain to you guys that in a little bit. But right now, let's just talk about resistance, right? So you have your resistance line drawn, $68. Now, you want to test it. You want to know whether or not it is the right resistance or you drew it. What do you do? Well, simply you just go move the chart and look at previous price analysis. You guys know this word. I always say it. Previous price analysis is how the chart reacted before. So a few months ago, few weeks ago, how did it react before? And what the number one thing you look for is to see whether it's hitting support and then bouncing. So you can see we have our resistance at $67.94. I'm going to say 68 just to play it safe, $68. If you look here on the chart, you will notice that, look, hey, that's kind of weird. The chart bounced on this level, right? For some reason, the trade came down, hit this level, and then bounced. That's one confirmation. The second confirmation, did this level react as some sort of resistance? Yes, it did. And how do I know that? Well, you simply keep going back, right? You simply drag out the chart. And then we can put our line right here. So right there. And now look what happened. This level confirmation was as resistance, wick, resistance, wick, resistance, resistance, resistance. Now I know, hey, okay, there's quite a lot of resistance tests. There's a lot of support tests in this level. And my third confirmation is, of course, what happens once the trade broke out. This is the third step. Third step of your resistance was to confirm. Once the trade broke out, did it use it as support? That is very important. You have to look for that. And you can see right here, yes, the trade broke out, we hit it as support, and then we continued pushing higher. That is your resistance, okay? That is your resistance. I would highly suggest you guys to go throughout your charts, whether you have charts now, look at them and backtest this. It's very important to backtest the wicks. The question, of course, comes, well, Pingu, hold on. Why didn't we put a resistance line here? Why, like you see the wicks here. There's a few wicks here. Why didn't we draw resistance there, right? Look, Pingu is rejecting that level too. So this is where it gets interesting. You can put a secondary line at a worst case extreme. What I mean by that is you guys will notice from my chart, my colors are different. My major resistance becomes red. My secondary resistance becomes green. And green simply means that if the structure were to break, right, and I'm in a short position because I know it's resistance, at a worst case extreme, I know it's not a fake out if it breaks this magical green line, right? So this is where, obviously this is where knowledge and stuff comes in throughout time, emotions, etc. But that is why I draw a secondary line. And you can see from the first example, the first wick, it did in fact break the red line, but it didn't go all the way to the green. It got a little bit higher and then it reversed, right? Same thing here. Look at this one, right? We broke the red line, we hit the green line, and then we rejected. Over here, we broke both the red and green, but then we rejected again. And this, of course, was probably during CPI or something, volatility, which I'll explain later. But that's how you draw your resistance zones. What you don't want to do, okay, all of you guys in this call right now, what you don't want to do is you don't want to draw 30, 40 lines. You're just going to make things more complicated for yourself. I would suggest you to have one major resistance during the market trend. So what that means is where the market price is trading right now, that is where you draw your resistance, right? At a worst case extreme, you draw above that. That's it. 2 lines is all we're doing right now. Just for an example, 2 lines. This is now a perfect wick area for resistance test and support test. That's where you're buying and you're selling, right? You have your worst case extreme. Now from the support level, same exact situation. We're going to zoom out. I'll make this quicker. We're going to zoom out. We're going to look where the market tested the most. Right there, boom, line drawn. Right? Look, 1, 2, 3, 4, 5, 6 tests. Let's just say 6. You have 6 tests on $59.39. That is my confirmation of support. But how do I know? Remember, the first rule is to draw it. The second rule is what? To see whether or not that support level acted as a resistance now. The first time we're acting resistance to support. The second time we're acting as support to resistance. Look what happened. Support broke, retested as resistance, then dropped back down. That is a confirmation, right? Now we have our support level drawn. What's the third rule? The third rule is a breakout. What happened on a breakout? You can see market broke, and then what happened? It retested as support. This is a strong support level. That is 3 rules for support and resistance. Now you have your confirmations. You know that these levels on a red line mean major level. So like Doge, for example, how did I know it was a major level? Well, because I followed this rule set, and this line was drawn across the board for the past year. So I knew over a time period of a year, this is a very strong resistance level. Any break of this resistance level, and it is going to cause a massive squeeze. That's pretty much how you know. When a major structure is broken, there is a ton of liquidity trapped within that range, a ton of stop losses, everything. When that level breaks, you see a massive move. And that's why I tell you guys, when a major level is about to break, pay attention to it, right? So now you have your resistance and you have your support. Great. Your chart looks great, right? You have your EMA set up, you have your RSI set up, you have your everything set up. Now, the question, of course, becomes is how do I know when to enter a trade? Well, it's super, super simple. Number one, once you have your trading confirmation on your support, you're going to do a few things. Number one is you're going to pay attention to your RSI. Now, remember, we're not trading simply off RSI. It's just an indicator, and we're simply going to use it as an indicator. You're going to see that, okay, RSI was somewhat oversold at this level, right? Number one. Number two, it's bouncing on support, right? That's 2 confirmations. Number 3, look what happened to the exponential moving averages. All of a sudden, let me zoom in for you. All of a sudden, now the exponential moving averages went from being used in this, like I said, remember we don't trade sideways, so this would be considered sideways. The EMAs switched to support. And look what happened. They were continuing to be used as support all the way towards the upside, right? So now in my head, did I know that, oh my God, this support level is going to hold? No, I didn't. I didn't know that. But what I do know now is, hey, look, the support level has held. The EMAs are bouncing. But let's say, for example, I missed the trade, right? I wasn't paying attention, whatever. And I'm over here now. So I come to the market and I look at Litecoin and I'm like, so this whole choppiness is done and we're trading right here around $63. Looking at this trade setup, what do? Well, simply, I would look at it like, okay, why was there a midterm resistance level right here? So why was there so much noise right here? Look at this. 1, 2, 3, 4, 5, 6, 7, 8 tests. Why? Why this level specifically, right? So I would just draw a secondary resistance just really quickly, just for my sake. I'll just draw it right there in a green line. When the market breaks that structure, I know, okay, midterm resistance is gone. Now the EMAs are being used as support. And I want to look for a long position where into $68. As long as the EMAs are being respected, so as long as they are being used as support, I am looking for an entry where? Where am I looking for an entry? Would it be right here? Or would it be right here? Or would it be right here? No. I am looking for an entry on my exponential moving average on the candle close. Very important, candle close. Once the candlestick closes, the EMA is respected. I continue looking for long positions. Once I hit a major resistance, I take my profits. I don't care if the resistance level looks like it's going to break. I don't care if Powell said Bitcoin's going to the moon. It doesn't matter. Take your profits on major resistance zones. Why? Because they are not guaranteed to break. Now look, psychological. The traders that basically held this trade for a long as a swing level were expecting $68 to break. Why? Because it was quote unquote a V-shaped formation, right? A V-shaped formation looks like something like this. But look what happened instead. The level structure didn't break, right? So the trade reversed. Where did it reverse to? Right below the entry of that trader. Boom, stop loss is hit, trade went negative, now you're upset. Do you see the power of scalping in this sort of situation? Right? So now we're bringing in the next lesson. Now we're talking about scalping. So scalping is being in and out of the market, not in the 5 minute, not in the 15 minute, not in the 30 minute. We talk about 4 hour, quote unquote, intraday scalping. And what that looks like is as long as the trade is holding above the exponential moving averages in the 4 hour, we are simply looking for long positions. Our stops are below the exponential moving averages, and we are locking in those gains all the way into resistance. Once the resistance level hits, we sit on our hands, we wait, we see what happens. If the structure breaks, we enter the long on the retest of support. If the structure does not break, what do? Do we short? Oh, Pingu, resistance, we're shorting. No, we're not. Why? Look at this example. Why is this not a short, right? This level right here, these candlesticks right here, why are these not shorts? The reason for that is because we are still trading above our exponential moving averages. I can give you an example really quickly. Look what happened to Doge, right? So Doge, as of right now, look at this. All of these traders that were shorting on resistance, right? Oh, it's resistance, it's not going to break, it's resistance, EMAs, they got wrecked. Simply, they got wrecked, right? Trade continued pushing higher, absolutely destroyed them, and they saw the squeeze. That's why I tell you guys all the time, look, when you are trading into resistance, you are not counter trading. You are trading into resistance. I hope that makes sense. You are trading into resistance. So what that means is if the trade is obviously pushing higher, you're simply going to trade into resistance. You will not counter trade yourself, because the minute you start counter trading yourself is when you start losing large amounts of money, right? Because when the trade actually breaks, now you're stuck. Now you're screwed. You're not even stuck, you're screwed, because the trade continued pushing higher without you. So this level is not a short, right? A short would be once the exponential average breaks, so once the EMAs break, and then retest as resistance. What do? When I see that, oh, EMAs have hit resistance. Okay, am I shorting now, right? The EMAs have hit resistance. We've broken a midterm support level. Do you see how I'm doing this? I basically analyze the trade even further. Like, remember when I talked to you guys about this, $61? Remember when I said, hey, look, why was there a lot of noise right here? What was going on here, right? This is now a midterm resistance. Well, same way. Whoa, what's going on here? Why is there a lot of noise here? Why is this level specifically being used as support? I'm not deleting my overall resistance and support lines. You see how I'm saying I'm just adding a few lines in between while the trade is happening. And how do I know when the level structure is going to break? It is not a crystal ball, guys. It is not a crystal ball. It simply means, look, the EMAs keep hitting. It keeps hitting the support level. The more times the support level hits, boom, that's the candle we trade on. That's what happens. And the reason why is, for whatever reason, 90% of the time when I send you guys a trade, the very next candle the move set is. And the reason for that is I don't send you the trade here because I know, hey, if I send the Telegram trade here, they might get chopped up, and then of course stops are going to be hit, and then the move set happens. No, I will simply analyze, wait for the right 4-hour candlestick, and then tell you guys, all right, boys and girls, go ahead. And that's why I analyze it like this. But look, now the structure has broken, right? The support level has broken. What now? Where is my take profit? Well, simply put, remember, we have our areas of support, right? We have our previous area of resistance. Next, switch to support. Boom, lock the profits in, right? Super simple. What happens next? Do we trade this? Losing my voice. Do we trade something like this? This chop? No. No, is there a trade here? No, there's not. Are we long? Why are we long? The EMAs are being used as resistance. That's not a long. Are we short? Why are we short? We're near support. It's simply just noise. You're not trading it. But what happens? Oh, whoa. Structure broke. Exponential average broke. Enter the longs. Where are we taking profits? Into $67 or $68. That's our major resistance. Does it matter? Oh, it's going to break. No. Lock the profits in. Look what happened again. Boom. Trade went sideways again. Right? Broke below the EMAs. What do? Whoa. EMAs broke. We're shorting. Resistance on the way down. What happened next? This gets interesting. Pay attention. What happens next? This gets very interesting. EMAs are being used as resistance now, right? Where are we headed? Well, we're headed right back to $61.84. So what am I going to do? I'm just going to continue shorting until that level hits. What happens then? Level breaks. That's where the money is, ladies and gentlemen. If you catch something like that, that is where the profits are, because now you've been riding your short. Maybe you didn't get the entry here. Maybe you didn't get the entry here. You could have just gotten the entry here. That is disgusting. That is a large 4-hour candlestick. And ladies and gentlemen, what do we do when the support level hits? Take your profits. That's it. Super simple. That's my trading style. That is all the quote unquote secrets. There aren't any. I'm drinking water because I'm losing my voice. But look, I know it looks super, like we started this from scratch. It looks super simple, right? Oh, easy peasy, I'm gonna go do this. Wrong. This takes years of practice, guys. This is a naked chart. It takes years of practice. You know, the hardest part of this trade style is the emotional part, is knowing that, you know what, I'm right, the market's wrong. That's what happens, right? This candlestick, when you're trading and, you know, this candlestick happens and now you're long, right? You're beautiful, you're profits, you're happy, breakout, boom. Next candlestick, rejection. Whoa, what the hell happened? Liquidation. That happens, right? So this is something you guys should take and study this video and practice on any single chart you want. Crypto, stocks, Forex, don't care. You can do it. You'll see it works. The hard part is, number one, placing your lines. Number two, back testing your lines. You can see my Bitcoin lines, and I haven't shown you guys this, but look at my Bitcoin lines. Ready? You guys ready for this? I know you can't possibly see because it's zoomed out, but look at this. Look at all my lines. Ready? Watch this. Watch this, watch this, watch this. Look at this. Do you guys see that? Look at that. Look how many lines I have. My charts are very clean, but when I zoom out like this, that's from all the way from 2018. I have never changed my lines. Yes, I draw some lines, these orange lines, green lines. I draw. But my lines don't change. The reason why they don't change, if they work, they work. Now, looking at Bitcoin, right? Current trade setup. Let's quickly talk about current, present. Look what happened here. Everyone pay attention. This is where the interesting stuff comes from. Bitcoin was testing 64.6, right? Look at that. Look how many tests we had on 64.6. How did I know today that we were going to break out? Was it a guessing game? No. Was it a crystal ball? No. Did Powell call me and tell me, hey, Pingu, long? No. 1, 2, third test. What happens on the third test? The more times the resistance level is tested, the likelihood of it breaking is a lot higher. Bitcoin broke. We locked in the profits. What happened next? Are we now looking at this trade setup? Is this respecting our rules? Ladies and gentlemen, trick question. Is this respecting our rules as of right now? I'm going to look at the chat. Look at this trade. Before I look, I'll explain the trade to you and then tell me yes or no, is this a long? Look at the trade. Look at the current trade setup, right? Current long, current 4-hour candlestick. Is this a trade setup? Yes or no? Tell me right now in the chat. Okay, Flynn said yes. Adele said no. Yes or no, guys? Come on, pay attention. Yes or no? Yes, yes. Gulp. All right, one more vote. Yes or no? Is this a long position or is this a waiting position? Yes or no? Yes on 6,400, 600. Okay, let me show you guys something interesting. If you said yes, you weren't wrong, but you're not right. And the reason for that is, look at the worst extreme. This is where a lot of traders struggle with. The worst extreme right now, hey guys, look what this is. What do you see here? The EMAs, right? But what do you see here? Look at this gap. Do you see this gap? This is a dangerous gap. And the reason it's a dangerous gap is because when the market wicks, these beautiful wicks right here, look what happened, right? These wicks. Look at these wicks. They hit the EMA and then it was respected. EMAs have to be respected. Now, would I take a long position after the breakout? So the breakout already happened. I entered the long position. Would I look for a re-entry? No. The reason why? EMAs are over leveraged. We are in extreme overbought conditions and we've only seen one test of support. Remember the golden rule. 3 tests. 3 tests on the 4 hour. It has to be 3. 1, 2, breakout. 1, 2, 3. The next 4 hour candlestick. What most likely is going to happen? Wicks. Wicks are going to happen, close, then bounce, and then break again. That is how it works. Exactly. Waiting, waiting, waiting. Now you guys are getting it. See? The gap is very important to study. You cannot forget about the exponential moving averages. Remember, we do not take a trade simply off the EMAs, but we have to respect the exponential moving averages and wait. That is where patience comes in, which is a hard thing to learn. Look at Ethereum as of right now, right? Look at Ethereum. Ethereum, did we break 2711? No, right? No, there's no break. Are we long here? No. Why? We're still testing the exponential moving averages as support. You want to make it super simple? For those of you paying attention, you'll probably already see it. What is this? Why is this interesting? What are all these wicks? Why are these wicks so interesting? What am I going to do? Where am I going to take a long? Everyone tell me right now. Where would I take a long on Ethereum? Am I taking it here? Am I guessing? Oh, the EMAs might hold, so I'm going to take a long? No. What am I doing? I am simply playing the noise, which is the wicks. Why? The wicks tell a story. And the story is, if this level breaks, we enter along into resistance. What do? Once resistance hits, we take our profits. We don't hold the trade, right? We don't hold the trade. You guys saw on Litecoin. It rejected resistance multiple times before it broke out. If it breaks out, great. Awesome. If it doesn't, are you going to be the poor chap who held his long position like this? It broke. Oh my God. I'm in profit. 2711. We're booming. Next candlestick wrecked. That's why. That's why I tell you guys, patience in this market is very, very important. And that is 31 minutes, 35 seconds. That was a new record for me on explaining 7 years of charts in 15 minutes. No, jokes aside. Okay. Did we all learn? Press 1 if you learned. Press 2 if you're still confused. I tried to make it as simple as I could for everyone. Everyone want number 1 or number 2? And if it's number 2, tell me what didn't make sense. But if it made sense, I need all of you to go in the charts and practice. Practice, practice, practice. Because this is not something that's going to come overnight, over a month, over 3 months. But when you get it, I promise you, you guys have seen people in this Telegram have taken their accounts 5, 6, 7, 8x just simply doing this. It is very simple to do once you get it. It's not as easy as it looks, but once you start understanding it, you will understand it. You will get it. It's okay, Fix. Lucky for you, the stream is recorded. Now, last but not least, guys, I highly suggest this, and I know I keep saying it, but the reason why is because my trading style is scalping. Get Jumpex. The fees are too much with this style because the way we trade, we are in and out of the market constantly on the exponential moving averages pushing upwards. Jumpex, the fees are very low. I keep recommending it. If you are using any broker, continue using it. No problem. But just keep an eye on your fees. Because I've seen time after time after time, people that are trying to make it in this market, a lot of you guys are small fish. When you are a small fish, you want to preserve your capital as much as you can. Bybit, Binance, KuCoin, I've traded all 3 and their fees are not fun. So that is my last, whatever you want to call it. Shiba's popping. I'll update that. What are your lines for support for Doge? I just watched the video for Doge. You'll see my lines. That's the best thing I can tell you. I don't want to go over the lines because it's educational. So I'm just going to, I want to make sure the rest 1,500 people that are waiting to watch this on their hours are going to watch it. Just respect their time too. Okay. RS Turtle, you can use Fairdesk. Fairdesk is Jumpex. Jumpex is their secondary exchange. It just has more pairs. It's literally still Fairdesk, just more pairs. That's why they launched Jumpex. So that's why it's still the same thing. It's a sister exchange. So you can use it. It's in the Telegram. Everyone, Telegram pin message. If you need questions, pin message. Everything is in the pin message. Trust me, it's worth it. I wouldn't suggest you guys something if it wasn't worth it. Pin message. Okay. I hope you guys learned something today. I hope, you know, like, look, guys, I'm going to be real. you guys are my number one priority. You will always be my number one priority. I've been doing this for about 1.5 years now. I get nothing from this. You guys see, I don't get paid from courses. I don't get paid from signals. I'm not that YouTuber. I don't care. I don't care for any of that. What I care is that one person, that random person that messages me and said, hey, I paid my mom's credit card bills because of you. Hey, my dad could go to surgery because of you. That's why I do what I do. It is very, very simple. I just want to see all of you guys become profitable traders within the next year or 2 years. I will hold your hand. I will teach you everything that I know. And I hope that you guys can overcome whatever you're struggling with trading wise, because I know how much of a difference it makes when you're a profitable trader, when you're struggling with your bills, and how easy it is to just be like, okay, boom, here's a long position, boom, profit, all right, bills are paid. Trust me, it is a very nice luxury to have in life, but it takes time and it takes skill. There's no reason why you have to go pay some YouTuber $1,000 for a course and he's gonna teach you jack shit when I can teach you the same thing within the past 15 minutes, more information than you'll learn in 7 years. Now, again, watch this video over and over until you get it. Once you get it, practice. And once you practice, if you still don't get it, come to the next live stream and question why I don't get it, and I'll explain to you in more detail. These sessions are 30 minutes long. I try to keep them 30 max. Trust me, there's a lot of stuff I want to teach you guys, from a psychological, emotional, take profit, stop losses, fake outs, manipulations, all of that. But I can't do that, in a 4-hour stream. I can do that once a week. So I told you guys this last time, we're going to start switching it up and doing more educational content, because a lot of you guys really need to understand this for the next coming run and how to spot your trades. Again, if you're not a leverage trader, cool. You don't have to be a leverage trader to know this. This is good for an investor. This is good for someone long-term that doesn't know, of course, when to enter a trade. And last but not least, ladies and gentlemen, remember, for those of you that said we're going to enter along, you would now be in loss. We are not entering along here. We are paying attention to the wicks. That is the last thing I'm saying. All right, guys. You guys have your I will make a spot position update tonight, I promise. All right. Have a great day, guys. Thank you guys so much for coming, and I hope you guys learned. All right. See ya.